All right, everyone, here we are with ticker symbol XPEV, XPEN Inc. And before we go ahead and jump into this chart, I want to say welcome to all my first-time viewers and investors. Welcome to my channel, Invest for Tomorrow. To all my subscribers, welcome back, and let's jump into this chart. So this one right here right now has had some volatility, but it's going in a sideways movement. Obviously, it ran up, broke through resistance from last week over to yesterday and so forth, jumping up and then now slightly falling. Now, I want us to pay close attention to the fact that it broke through the 50-day moving average again, and the question is, could the bulls reappear and bring this one back up, or is this going to have trouble staying in on top of the 50-day moving average? Because right now we're seeing that it breaks through it and it doesn't stay in above it. It actually breaks right back through it. So the tug of war is pretty serious, and we've seen it stay back and forth previously to these runs that we saw here, and way back here is still that support that I will definitely advise every single investor to keep in mind if this was to go in the other direction, which is 25.20. But now as it's moved up and it's gone sideways, the other next point of reference before 25.20 is down here at 30.50, and here we are now up here at that 42.41 range. And what is our 50-day moving average? Well, the 50-day moving average is 43.65. I'd write that down. Super important number to keep in mind. As long as we're below it, we're in bearish territory, and the moment we're above it, we're in bullish territory. So super important to keep in mind what side of the chart we're in and why support level right now that we're currently in is super important, and also why the 50-day moving average and the resistance is super important. And we're going to talk about that in just a second. So we're currently right now in bearish territory. So if this was to go any further down, it would break through the support, move further away from the 50-day moving average, and start to work its way down to newer lows. So what is that support level? Well, this support level is 41.81. If that gets broken through by the bears, this is significant because we're already in bearish territory. And if that gets broken through, we're going to see newer lows and newer support levels being broken through, because ideally the whole thing here is that we're below the 50-day moving average, and the bulls need to reappear quickly before this starts to reach newer lows so that they can get back over the 50-day moving average back into bullish territory. So there's a shot here for the bulls with this area that we're in, because the tug of war is possible. But if the bears continue to dominate the chart and pull this one down and break through this support of 41.81, this could be on its way to newer lows, pull further away from the 50-day moving average, and we're already in bearish territory, and this is just going to bring us deeper into bearish territory as it already is. So I want to emphasize to all investors, pay very close attention to how this stock is reacting if it breaks through 41.81, and how quickly is it moving to newer lows. Now, on the other hand, the bears don't want this to happen, and if they're losing traction, the bulls are actually starting to gain control. And their first resistance level, ideally right now, you kind of want to find a midway point between this resistance and this support, would be the 50-day moving average. And the 50-day moving average, as I stated earlier, is 43.65. And if that gets broken through, the bulls have accomplished their first step of getting back into bullish territory. And that's breaking the 50-day moving average. But to stay in it, they need to pull away from the 50-day moving average. And the highest point before this fell and ended up in bearish territory is our resistance. And that's 44.90. The bulls need to break through this. I want to emphasize this. They need to break through this. If they build any single type of momentum on the way up, yes, getting into bullish territory is the goal, but to stay in it and build that momentum and hit newer highs, the bulls are going to want to break through 44.90, turn that into a support, and break away into newer highs. To kind of show you how that would create an effect of hitting newer highs, by breaking over the 50-day moving average, using it as support, and then breaking over the resistance and using it as support, the bulls could be on their way, creating that staircase effect in the upward direction to hit newer highs and new resistance levels. So super important for the bulls to break through this resistance. Of course, they need to break through the 50-day moving average first, get into bullish territory, and their next step is breaking through resistance at 44.90, turn that into a support to reach newer highs and new resistance levels. As always, if you found this video helpful and informative, please do so and subscribe. Don't forget to click on the bell to turn on all notifications and not miss a single video that I post. Share this with your friends and community, and don't forget to hit the like button to let me know you watched this video. Thank you guys so much for watching, and let's make some money. At the end of this video, there's going to be a pop-up video. In that video, I will be discussing about the S&P 500 index and how it's been rising several points on scheduled dates. And on these scheduled dates, the S&P 500 index is rising due to the fact that the Federal Reserve is pumping the markets. What does that mean for us as investors? Well, if the S&P 500 index is rising, there's individual ticker symbols rising up with it. They're rising up anywhere from 30 cents to $3 per share, sometimes even more. Obviously, you have to do your due diligence and research, but I know that per share, it may not sound like a lot, but that does add up per share. I mean, keep in mind, 30 cents to $3 per share does add up. I know that I always say profits are profits, and if you put $1 into the market and you got back $2, you've done a great job. And that's what this is all about here, so that we can all learn and grow together, and also so that I can inform every single investor and viewer on the great news that there is an opportunity to maximize profits. Now, I'm not guaranteeing you profits in the video. I'm not telling you to buy, sell, or hold anything in particular. I'm just analyzing the S&P 500 index and putting the dates and the charts side by side so you can see for yourself that they speak for themselves. Literally, it's showing it in the charts, and on the specific dates you could see it. And if it's rising up, there's individual ticker symbols within it rising up. So you have to do your due diligence, as I stated, and research. But it is an opportunity, whether the market's going up or the market's going down, to maximize profits and minimize losses. Now, again, I'm not there to guarantee you profits. I'm not there to tell you to buy, sell, or hold anything in particular. I'm just here to enlighten every single viewer and investor on the great news that there is an opportunity to maximize profits and minimize losses. Check out the video. I wouldn't want you guys to overlook it. I just did the most updated one for this week, and you'll see in the chart what I explain, and then look at the S&P 500 index today, how it reacted, and you will see everything that I talked about is in that video. It's very informative and helpful. I wouldn't want you guys to miss it. It's super good information for every single investor to be better equipped weekly. It's a weekly series that I do, so stay tuned for more as long as the Federal Reserve continues to pump the markets. Thank you guys so much for watching, and let's make some money.